Hello, 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 everyone! Happy Independence Day. Oh, you know what I forgot to do? Hold on. You know what I forgot to do? There we go. I thought something was wrong there. Sorry. Wow, forgot the green screen. Green screen up. There we go. How is everyone doing? I was wondering how many crazy people were going to join me July 3rd afternoon. By the way, I did record the stock sector overview. It's live now. It's still processing the HD version, so check that out when you have a chance. Hello, happy Independence Day, everyone. Davey, happy Independence Day. George? Hey, Patrick, same to you. Wi-Fi is great. I wish I could do this from outside, but that wouldn't work so well, would it? Now, hey, Dan Jett, welcome. I know you're house hunting in AZ. Are you aware of the droughts and the situation where the Hoover Dam is in the southwest? Yes, and I lived in AZ for a number of years also. So I just happen to love the desert. But I'm not. I'm gonna be looking more so in the higher desert at some point. So yes, and the drought situation is bad. But I was used to, dry conditions when I was there before. So, by the way, still have to do this. Why is this going on the third? Stocks close tomorrow. Well, we have people over in Asia and Europe that trade the futures. And you see here behind me, the futures still. The futures are opening tonight at their normal time. And tomorrow they do close early. Noon for the equities and interest rates. Cryptos and FX at 4 p.m. Central Time, and oil metals at 1:30. So please remember that. Okay. So we still have to recover stuff. Now this is going to be a slightly shortened session. We're not going to spend all afternoon here on a nice long weekend day, but we do have to do some prep, and I will be back on tomorrow afternoon after the markets close. I have to wait at least for oil to close. So, because then we'll get a better idea of where we sit. Remember, Friday afternoon was lower liquidity. A lot of bigger players left early or took the day off. So we had a couple aggressive buy signals. I'm taking things with a little grain of salt. Really want to see how it trades overnight. And check out the sector overview, as I mentioned before. By the way, if you are new here, please do consider subscribing, ringing that bell, and hitting that like button. Longer term subscribers, please come back when this is over and leave a comment. Sorry for the little hiccup with the green screen at the beginning. All right, July 4th. Again, nothing's coming out tomorrow. Tuesday, factory orders minor. So Tuesday's not a big day. Wednesday, though, we got some mortgage stuff, but we got starting at 8 o'clock. So right when the live stream, we got Fed Williams speaking at 8:45. So 15 minutes after the open, we have the composite PMI final and the services PMIs, and those will be pretty important. And ISM non-manufacturing, very important at 9 a.m., especially some of the subcomponent aspects, new orders, whether the employment, whether this is going to tip into contraction. Remember, contraction is anything below 50. And prices, how that's good. I think this is going to come down a bit, but not substantially. We'll see how the job openings are. And then Wednesday afternoon, 1 p.m. Central, the FOMC minutes. Thursday, you got employment stuff going on. And then you have all your crude numbers. And then Thursday at noon, you have two Fed speaks. Friday, you have non-farm payroll Friday. So this is very important coming up Friday to see if that starts bumping up or not. And then we have Fed Williams speaking at 10. And consumer credit will actually be interesting. So it's stacked a little later in the week this week. Also remember, where did that thing go? There. I put this up on Friday. Remember, the Atlanta Fed puts out the GDP Now model, all right? And it's dropped to 2.1%. Now, somebody else did some analysis I was reading that since this came out, they started doing this in 2013. There's only been one instance where it recovered enough to take this back to zero, and that was when it dropped, and then we had that massive stimulus with COVID. That was the only time. Other than that, it's never recovered this big a drop. And I don't see them going to quantitative easing and starting rate cuts in this environment. So I think we're going to print 2 quarters negative it now. And so for all those people say, it's still not officially a recession, because I don't think they're going to, I think they're going to hold off labeling as long as possible a recession, as long as unemployment holds up. But I think we're going to start seeing that earnings getting crushed coming up in the next 2 quarters. All right. So just keep that in mind. Friday, again, pretty bullish day overall, but a lot thinner traded markets, except for chips. And I talked about semis in the stock sector overview, so definitely check that out. What else do we have? FOMC still 82% for that 75 basis point hike, and still in negative gamma. Drink for that proposed drinking game. All right. Let's knock some of this out quick so we can just prep for tonight for anybody who's following the futures, and then we'll fine tune it tomorrow. Hey, Ted, what's up? All right, what I'm talking about, this closed right at the high, so that's technically not a buy. It has to close over. Cycles are getting to the bottom on the daily, but the weekly still holding up. You see here, still holding higher. So that's where it's interesting. First tap off the weekly rotation zone. So we could get a little push up before another rollover play. The only way I get starting to get more aggressive is if we can get back above about 39.15. Other than that, it would just be intraday or swing trade, short-term swing trade aggressive. And if you want the targets, we'll refine these tuned tomorrow, but this is a great way to use your reverse harmonics. And my target area, look at the 62 and a half coming right at that daily rotation zone. So on a stronger rally, 38.73, I don't think we're going to see a lot of strong price action. And minor would be 38.46 if we get a bullish bias overnight into tomorrow. It depends on how Europe's opening. Major support is coming back down. We have these two bottoms around 37.41. And I have the harmonics both ways. 37.15, 36.89. Then if we were to break this week above 39.50, we're going into a clear path, and I'd be using 39.89 with the converging of the 50 EMA and then 4,027. Also, I think it might drop tomorrow, if not tomorrow, first thing Tuesday. I did record the Futures Edge with Jim Iorio on Friday. That's getting edited this weekend, so you're going to get to hear some of my longer term thoughts on the market between myself, Bob, and Jim. So make sure you check that out also. You are welcome, Patrick. When I read about interesting stuff or I research stuff, I'm going to pass it along. That's the other benefit from tuning into this channel. You're not going to get fluff. You're actually going to get stuff that can really impact stuff. And why am I so focused on that? The back-to-back GDP, because psychologically we're in contraction mode then, and we'll see a big earnings crush. And estimates, as I've talked about, analysts in recessions, even if they're going to label this one or try to scapegoat it out by saying, oh, unemployment's holding up, you're still going to see those major retractions, and estimates are always way overdone by analysts in recessions. So we could see a bigger pullback at earnings, which is really could trigger the next major leg down in stocks. NASDAQ still's got an aggressive buy Tuesday or Wednesday on a close above the high from June 30th, and that would be 11,696.75. Same thing pretty much for overnight and tomorrow. My first target here would be the 37.5, which is also the opening price from the 30th of June and pretty much the closing price. So now we have a closing price and opening price, the bottom of the rotation zone in the 37.5. So that's what I'm targeting, about 11,700. And the next target higher I'd be using is the 50% retracement, 11,808. Minor support, I mean, I didn't really go through this with the S&P, but I'd just be watching. You really just got to watch down here to 11,400 to about 11,350. And for the S&P, since I didn't go over it, minor would be on a pullback to about 38.13. More significant would be about 37.95, and then major 37.49. Dow did have an aggressive buy signal triggered on Friday. Again, taking it with a grain of salt due to the lower liquidity and the push-up move in the after. Also doing the 50% retracement from here. So my next target is roughly 31,333 to about 31,265 right in here. That's what I'm utilizing to the upside on a pullback level. Support coming in just about higher than this, right about 30,900. Then below that, about 30,773. Let's see where else we sit. Russell triggered a double bottom right on the close. Okay, so the target 1749, 1760, 1771. And because of lower liquidity, it's a little lower probability. And if you get back a close below about 1697.70, it's off the table. DAX, since Europe will be trading, DAX also triggered a double. So DAX, we have this gap fill, and look at the first target. We have this key close, which was not filled, and then you have two gaps. But this bigger gap from this emotional candle is right at the first target. Really nice little setup here, 12,965, 13,025, then 13,087. What's going to invalidate that on a closing basis? It would be a close below about 12,687. Crude, we do have a little potential double here. So the only way I get more bullish in crude, cycles at the top on the daily and trying to roll over and not yet bottoming on the weekly. This could still pull back, hold this area, and it would not be a triple. So we could roll over, still hold this area without making it a triple bottom, and that would keep the double intact. But to trigger that double, 114.05, 118.79, 121.14, then 123.15. First and second targets are the stronger ones for me. And you see holding this weekly rotation zone. Still no close below the weekly rotation zone. Remember, watch it on a closing basis. If we do break down, my support areas coming in about 103, then 101.50. Below 101.50, 98.76. So that's what I'm keeping an eye on. So I'm not getting overly bullish in crude unless we triggered this double. Natty gas, just consolidation. We'll check in more on that tomorrow. Gold, not much going down. We do have a bigger double picture. I talked about this on the podcast, but that's a long way out from triggering. By the way, an aggressive buy, front run pattern for that double on a close above Friday's high. I will get to Tesla, and I'll probably cover Tesla again tomorrow for anybody tuning in then. Notes. I talk about this. I'm watching for a pullback and then a rotation back up, which would make a nice inverse head and shoulders play, especially with the sell pressure a little. My support levels are 118.20 and then 117.29. That's what I'm keeping an eye on, especially with this little thing. And no, we don't have a double top because of this spike high, but I'll start watching for the bigger pullback. We start breaking below 119.08. And then do not ignore the rising 4-hour rotation zone on that. Dollar index still, we have this minor double. You see this minor double, 104.40. Close below that, I start watching for the bigger pullback in that we've already statistically come up and hit this 87.5 area a couple times. So I know the harmonics aren't reversed, but that 12.5 matches the 87.5, and it'd be the same up and down area. So this statistically, when it closes above that 62.5, hit the probabilities right there and put it in this potential topping pattern. But that would just be a minor topping pattern. Remember, the major topping pattern is off the table. By the way, if it does push to new highs, 105.71, then 106.38. VIX, we'll just cover this tomorrow. Japan, keeping an eye on that still, but we have not had the pop pressure for a few days now. And we do have a little potential double top on here, so I'm watching for that trigger. And you see where the rotation zone is on the daily. That would trigger on a close below this low, coming in at 134.265. And then it would be out of the way of the rotation zone, so then I'd be watching for the bigger pullback in that. Swissy talked about this on the podcast. So if you want to know some thoughts on this, please tune into that, but still not triggered on a closing basis in the spot. What's interesting, we covered the futures on the podcast and it did trigger the futures. So you want to hear my what I talk about with that? Again, you'll have to tune in. So I want to get more viewers on that, so I'm not going to ruin it. By the way, this is not a double bottom. There's some interesting stuff. There's a lot of exchanges. There's at least 5 exchanges that are going bankrupt and shutting down and limiting withdrawals. So I don't know how that's going to play out. Longer term, there's going to be pressure. I don't know how that's going to play out in the short term. Holding this first target, but remember, it's triggered this double. So 18.3 and then 17.72. The only thing that changes that is on a close above 21.866, we trigger a double bottom pattern. 23.500, 24.313, 25.129. Tesla missed deliveries. Even the way ratcheted down delivery number was missed. The only thing they beat on was deliveries on the S and X, but I'm taking that with a grain of salt. I don't know how this is going to open. The only bullish play I have in here is above about 692 for the gap fill. The gap fill to 697.99. And if we ran above that to I'd be watching about 709. Now we did close back below the 62.5 level. So statistically, we favor a return to at least 647 area, potentially to the major lows. So please keep that in mind. Statistical now, it favors, even if it pops up and then it gets a rollover play, it favors a return to the lows. All right. So that's where we sit on those levels. So please, that's where anything on a ramp up play, at least unless we start getting some rip your face off rally in the market, would be very short term in my book with Tesla. You do have daily cycles at the bottom, but not yet turning up. And weekly cycles are at the top, and you see rotation zone move down. Rotation zone move down, and this is in triple bottom territory. Remember, if we make a triple bottom, especially on a weekly basis, it slightly favors the continuation pattern. And when it's situated like this with the weekly rotation zone, the probabilities go up even higher. What are the next? Then the major target, then I'll just put this out there because sometimes I forget is about 578 to 580, next major target lower. So that's your Tesla plays. Tesla 1 day double bottom. This is not a double bottom. This is just a sloppy mess. So this does not qualify because of this. It's almost a horribly sloppy inverse head and shoulders. The only interesting thing, if you're looking for the shorter, if we do get that gap up, you are into a clear path move here, but you'd need some heavy lifting being done by the S&P and NASDAQ, especially with the miss and where all the cycle patterns are. So that does not qualify as a double bottom. Well, you're welcome, Chris. The only time I don't respond is if it freezes for some reason in eCam, and then I can't see it, like what happened the other day. I be cursed. Welcome. I hope you're not cursed. Do Amazon. I wish they'd get that fixed. Amazon, remember, we finished that double pattern from a while ago, coming back down. And by the way, this is not a bigger double pattern. And I've seen people put out there that this is a head and shoulders. It is not a head and shoulders. Why? Because a head and shoulders is a reversal pattern. It's not, head and shoulders is not a continuation pattern. Okay? So this first is not a head and shoulders pattern. It can't be an inverse head and shoulders pattern. And this, getting some stuff out of the way in case we get some new people watching it. This is not a potential double bottom. Why? Because the second, third, or the first, second, and third targets cut into the wicks. You need the first and second targets being within the candle bodies. It's not reversing enough of a move. So, where does that leave us? It got an aggressive buy signal on Friday. Again, lower liquidity buy signal. It is against the daily rotation zone. Cycles are at the bottom on the daily, but at the top on the weekly. And you see we have not been able to get a key close in the weekly rotation zone. Longer term, still very bearish on Amazon. The only way I'm interested in something is if it gets a short-term pop play with mega caps. And here are your targets the upside. 112.45, 116, and then the major target 118.90. Major target, that's a 62.5% from this down move and the 50 EMA. So on any pop up there, until it could get a daily close above there, it's not anything to play more than a short-term pop. Support coming in 105.80, and then the retest of the low area 101.50 on a breakdown. But your early warning sign is if you break below that 105.90. Retest of the lows, your low area, there's no strong buy pattern yet besides that very aggressive low liquidity buy on Friday, but that could just be for a 1 or 2 day pop. Your next minor level is 97.90, and your major levels coming in about 95 to the downside. So that's where we sit. There's no great long-term bottoming pattern yet in Amazon. Amazon also, from the fundamental, they've canceled some more factory builds this year. They're entrenching because the consumer is going to entrench. All right, so they're pulling back spending and investments on expansion for the time being. So please keep that in mind from the fundamental play. And there's no strong technical play just yet. Does URA look like it's going to test the 15 area to you? Uranium. Uranium has a potential. It's against key support down here. If we do break down, I'll give you my lower targets, but I'm watching for another buy setup on the close above 120. You can see that double bottom. That would be out of the way. Fundamentally, uranium's still a buy, and on Friday it triggered an aggressive buy front run pattern. Okay, so I'm watching for some upwards pressure, and then I get more bullish. Remember, this for me is trading around the core position. Why? Because of the choppy nature and the pullbacks, and this is very volatile in the commodity sectors, especially with commodities. Go watch the sector overview with my take on that right now. But it's really to keep trading around a core position. On a close above 28, 20, 21, 21, 31, would not ignore that with the 50 EMA. And you have gaps up here, 21.85, 22.40 are the targets. It could make a nice little bullish run. Now, if it breaks back down, next support area is 17. All right, and that would pretty much invalidate this double. Nearly, it'd be close. But your bigger picture, if we did break below that, this is where, if we start breaking down again, I like to lighten up before I add. If we break below 17.15, my next major target is 15.50 with the weekly 200 and the harmonic. All right. Sure, let me get to end phase. Potential double top here. And I mean it's a fair way off from triggering, so that would be a great level if you're long on end phase 167.23 on a closing basis would trigger to double. 145.79 and you have a gap down there, and then 135.08 are your two targets on that. Early warning sign for me is if you get a close back below about 180.50 area. You can even go to about 178. That would take you below this little spike low on June 29th and back below the 200. That would be an even tighter stop level for that. To the upside, this was an aggressive buy pattern for a continuation move that hasn't materialized yet, but my targets would be 206.14 and then back to about 213.50 to 217. But from anything on the long side, if you start breaking below that double, then watch out, because that will retest this low area, which then turns this into almost a quad bottom pattern. And then I'd be watching for that to break and target down by the 200. So that's where we stand right now. Now, if it can break above this most recent high area, 218, your breakdown area is pretty much virtually here at that first second. So that'd be 247.89. Again, cycles at the top on the weekly and at the bottom on the daily. So mixed setup right here. So I need a stronger short-term pattern to take action. And really my thing would be, if it's going to get bullish mode, I'd really need a breakout play to the upside. XPEV support will hold. Well, this was a return to the rotation zone. Still triggered the double, but this double isn't off the table for quite some time. You'd need on a closing basis below 23.15. Even if this pulls back more, you have major support coming in. Let me just check this weekly. Your major support still with this reversal. This is an inside week. 28.14 and then 26.43. You got, let me just see here. You got cycles on the daily getting to the bottom, but no cross up on the top weekly. So this could see still some more consolidation or a slight pullback before another potential push higher. If you're looking for an area to buy it, this is where I would be patient. And that was a stop on the doubles, and based off this, your major support on this last run up is coming back at about 26.70. Could Palantir head back down to $7? Easily. Remember, Palantir is still, you're in a very tough environment, and it doesn't earn anything yet. Now, it's going to get traded very similar to the crap NASDAQ stuff. It finally filled the gap and moved back down. I get really edgy if you break below 855 if you're trading to the long side. Below 855, you're then looking back to 750, which is key support. And you break below that, this thing's easily going lower. Cycles at the top on the weekly, and you see all this is on the daily. What does this look like? It's just a flag channel pattern, which when you're against the weekly rotation zone, you're just looking at some point for the bigger correction move. Cycles at the bottom on the daily, but again, top on the weekly. So could it be mixed message trading for a little bit longer? Yeah. Your only play earlier was that double bottom play and then running it up to the other side of the channel. But now it's dropped back below the 50. If you want your next upside target, if it does make a run, you're looking about 1040 to about 1060. That's got limited upside. The risk is to the downside. Happy, 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 Daniel. You're welcome, AB. You're welcome, Davey. Hey, Ted. All righty there. All right. Not seeing anything else. So I'm going to keep this a little short. I mean, we already went 30 minutes. We already went 30 minutes on a holiday weekend. So I think if you have some more questions, I will do a session tomorrow afternoon because we'll get more trading data from the Europe, Asian, and European session. Remember, that's why it closes at noon. It's specifically why, and people wonder, well, why are the futures open if the stocks aren't open? Because look when they close. Look when the financial futures close. Europe winds down right around 11 to noon Central Time. Okay? The financial futures close at 12 Central Time. Why are they there? They're there for hedging or for position plays for the Asian and European sessions. Then they're closed. And then they reopen for the overnight. They're not here for the U.S. traders, essentially. So that's why, in case you were wondering, that's why they are open and the stocks aren't, because we have a holiday. So if you're a futures trader, you don't have to do anything, but I like to cater to all different types of people. Well, it's good to see you too, Ted. Thank you. Everybody enjoy, if you're in the US of A, enjoy your Independence Day. Enjoy the rest of your weekend. And when you have a chance, watch some of the other videos. Until then, if you don't have anything to trade, don't trade. Sit on your hands and enjoy the time off. And I'll talk to everyone tomorrow if you can join me. Bye for